Welcome back to the channel, traders. Today, we're diving deep into the fascinating world of how to borrow stocks and potential short squeeze candidates, focusing our lens specifically on CIIT International Inc., ticker symbol CIIT. You might be hearing about CIIT because of its incredibly high cost to borrow fee, which has certainly caught our attention. We're going to break down exactly what that means, why it matters, and what to watch for. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show CIIT logo/chart. Let's get started with CIIT International Inc., trading as CIIT. This company operates in the industrial sector, specifically within integrated freight and logistics. With a market cap currently sitting at around $3.04 million, CIIT is a microcap player. Through its subsidiary Washing International Company Limited, CIIT International provides vital logistics services across Hong Kong, Vietnam, Japan, Zimbabwe, and South Korea, primarily focusing on ocean freight forwarding and container shipping. What is cost to borrow and why it matters? Animation shows short seller concept. Now, let's talk about the term that puts CIIT on our radar: cost to borrow, or CTB. When an investor wants to short a stock, they need to borrow shares from a broker first. That borrowing isn't free. They pay an annualized interest rate for those shares, which is the cost to borrow. A high CTB indicates strong demand from short sellers to bet against the stock, or, more often, a very limited supply of shares available to borrow. When that fee rockets up, especially into the hundreds or even thousands of percent annualized, it's a clear signal of tightness in the borrow market. Why this stock is hard to borrow right now. Highlight 974.6% CTB. So, why is CIIT particularly interesting right now? Our screeners flagged CIIT International because its cost to borrow fee has soared to an astonishing 974.6% annualized. That's nearly a 1000% yearly premium just to hold a short position. For perspective, most stocks are in the low single digits. We also note that the estimated float for CIIT is 7.3 million shares. While the exact number of shares currently available to borrow is unknown, a CTB fee this high almost always means the supply is incredibly constrained. Our internal composite squeeze score for CIIT, which combines factors like CTB level, borrow supply, and technicals, currently sits at 55.0 out of 100, indicating a notable level of interest. Squeeze mechanics explained. Animation short squeeze graphic. Why does a high cost to borrow matter for a potential short squeeze? A short squeeze happens when the price of a heavily shorted stock rapidly increases, forcing short sellers to buy back shares to close their positions and limit their losses. This buying further drives the price up, creating a snowball effect. When a stock like CIIT has a CTB near 1000%, it puts immense pressure on short sellers. They're paying a fortune every single day. If the stock price starts to climb, the astronomical borrowing costs combined with unrealized losses can trigger a scramble to cover, fueling a squeeze. However, it's crucial to understand that a high CTB does not guarantee a squeeze. It can also mean short sellers have very strong conviction that the stock will fall, and they are willing to pay those high fees to stay in their positions. Dilution risk check. Show no dilution check work. One of the biggest risks to a short squeeze thesis, even with high CTB, is dilution. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding and can depress the stock price, reducing the value of existing shares. For CIIT, we've checked for recent dilutive SEC filings like SMINUS-1, SMINUS-3s, or 424BS, and we found no recent dilutive filings in the last 90 days. This is a positive sign for a potential squeeze scenario, as new shares flooding the market could easily negate any buying pressure from short covering. Recent reverse split watch. Highlight reverse split date 2026-7-20. Now, something very important to note for CIIT. CIIT International executed a 1-for-10 reverse stock split just 23 days ago, on July 20, 2026. A reverse split reduces the number of outstanding shares and, in theory, increases the price per share proportionally. This effectively reduces the public float, which can sometimes make a stock even more prone to volatility. Historically, many microcap stocks that undergo a reverse split tend to see renewed volatility or even a price pop within about a month after the split. While this is a common pattern observed in the market, particularly with smaller companies, it's definitely not a guarantee and should be considered an observation, not a prediction. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show a price chart with numbers. Let's look at CIIT's recent price action and volume. Today, CIIT is down -6.93%, and over the last 5 days, it's down -7.18%. However, zooming out to the last 30 days tells a very different story. CIIT is up a massive +487.54%. Show volume chart. Volume-wise, today's volume is 62,900 shares, which is significantly lower than its 30-day average volume of 332,593 shares, giving it a relative volume of just 0.2x average. For potential short squeeze to materialize, we typically want to see a significant surge in trading volume, ideally on upward price momentum. Further tightening of borrower supply, any positive news catalysts for CIIT International, or even higher CTB fees could be triggers. Keep an eye on the liquidity and any shifts in the supply of shares available to short. Show CIIT logo. CIIT International Inc., or CIIT, presents a compelling case study in the hard-to-borrow universe, driven by its extraordinary 974.6% cost to borrow fee and recent reverse stock split. While the setup is certainly intriguing from a short squeeze perspective, remember, this is high-risk, high-reward territory. Always approach these situations with extreme caution and a well-defined strategy. If you found this breakdown of CIIT and short squeeze mechanics helpful, please hit that like button, subscribe to the channel for more unique stock insights, and let us know your thoughts or questions about CIIT in the comments below. We love hearing from you.